FUD is growing ahead of the Federal Reserve meeting. Crypto.com changes its tune after huge backlash. ApeCoin sneaks in a new integration after a messy virtual land drop. Incur protocol has a different approach to cutting their yields. Algorand scores with FIFA, and Solana developers come forward with some solutions to the latest network outage. Here's your Altcoin Buzz news. Hi, I'm Natalie and welcome to Altcoin Buzz. We are a crypto investing research company and we've been on the leading edge for many 100x return tokens and projects in the crypto space. And we want to share more opportunities with you. So if you want to be in the loop for early gems, NFT mint opportunities, technical analysis, and so much more, then you need to check out our new and improved AB Access Pro. Plans start at $99 a month and you can sign up below or right here on the screen. And we have another exclusive offer. US customers can sign up with the MEXC exchange to get $25 in your wallet, plus 1 month of Access Pro for free. Check out the link below for all the juicy details. And please do smash those like, subscribe, and notification buttons so you're always up to date with our news, deep dives, and great offers. Just keep in mind that this is not investment advice. So let's get to the news. No change on the Bitcoin price front, but nerves are growing for investors awaiting the big May 4th meeting with the US Federal Reserve. Yes, Bitcoin has been steady Eddie at 37 to 38K, but that could change if and when the Feds officially announce their proposed key interest rate hikes, which are projected to happen tomorrow. And even the stock market is bracing itself. Prominent investor Paul Tudor Jones has been saying that you don't want to own bonds or stocks at this juncture and that you can't think of a worse macro environment than we are in right now for financial assets. Wow. And as for Bitcoin and other crypto holdings, they're walking a fine line between bearish leaning, short-term price action, and solid long-term trends. So this upcoming meeting is just piling on the FUD and leaving the finance and crypto communities eating their popcorn for a potential capitulation event, assuming holders just give up their assets and get out of the game. And yet, though this market has been serving bearish sentiments for months, analysts are calling for a higher likelihood of Bitcoin hitting 100K rather than to drop below $30,000. So how about that for fear, uncertainty, and doubt? The people have spoken, and Crypto.com is bringing back parts of their staking program that were initially slashed in the company's restructuring. The crypto exchange shot itself in the foot with yesterday's announcement. Among other things, the exchange had planned to cut cashback rewards in half for certain debit cards and to put an end to Crow token staking rewards altogether. And what happened? There was a huge backlash online and Crow tokens tanked by nearly 30%. So this morning, Crypto.com CEO Chris Marzalik tweeted that the company would be revising card staking rates. And so far, Marzalik says that CDC will be offering a more balanced approach for staking rewards, dropping private members to an 8% annual percentage yield, and the Royal Indigo and Jade Green card tiers to a 4% APY. Crypto.com says all of the original restructuring changes announced yesterday were made to ensure long-term sustainability for future yield offerings for their debit cards. ApeCoin has found a new home after a messy NFT land sale this weekend that sent Ethereum gas fees through the roof. The ApeCoin DAO has announced a swift integration on Ethereum sidechain Polygon. This has users raising some eyebrows. In case you missed it, Yuga Labs' Other Deeds virtual land NFT tokens dropped on Sunday, May 1st, netting over $300 million in sales. The demand was so high for virtual land in the Other Side metaverse that users were forced to pay 2 to 5 Ether in just gas fees just to get their transactions through. That's roughly $7,000 to $14,000. And a good amount of users didn't even get their NFTs minted and still had to pay the hefty gas bill. Outrage ensued, and Yuga Labs has promised to reimburse those gas fees for users who couldn't mint. But the real aha moment is that some users feel that the land drop was a publicity stunt. saying that the overload on Ether gas fees was on purpose in order to get the point across about the gas fee issue. And here we are with ApeCoin on Polygon. And the Matic network is rolling out over 19,000 dApps and games that are Ape token compatible, with unconfirmed rumblings of ApeCoin's own Polygon sidechain. Yuga Labs may have put the blame on Ethereum for the epic hot mess of a drop, but I'll leave the opinions up to you. Drop me your thoughts below. There's more yield rate cutting. Terra's DeFi platform Incur protocol has just reduced its annual percentage yields. But the big difference from these cuts to Crypto.com's cuts is that Incur asked users first. And they approved the motion all the way back in March. And now Incur is dropping annual returns from 20 to just 18%, also in the name of sustainability. But the protocol has been growing with huge demand, doubling its total value locked to $16.6 billion this year. The only downside so far is that its native ANC token did take about a 15% hit with the news. The FIFA World Cup has a new crypto partner. Algorand has stepped in as the tournament's first American blockchain sponsor, and the deal will have the TradeFi and DeFi platform helping tournament organizers to create a digital asset strategy, along with making a FIFA official wallet solution for the World Cup held in Qatar in November. Algorand's sponsorship also extends to the FIFA Women's World Cup in Australia and New Zealand, kicking off next year. How ironic, though, is that crypto is banned in Qatar. But that hasn't had an effect on the news or algo token price action, which may have been rallying about 19% in the last 24 hours thanks to the announcement. And lastly, Solana developers are speaking out about the blockchain's latest network outage over the weekend and how to avoid the next one. Solana was offline for 7 whole hours because of an overload of NFT minting bots that rallied about 4 million transactions per second, which kicked all the validators out of consensus, forcing the network to go dark. And now developers are focusing on 3 main areas to fix to mitigate more targeted NFT minting activity, starting with implementing Solana core protocols on Google Protocol QUIC, which would add more flow control to the network. Then, developers say that they want to utilize Solana's proof-of-stake model with stake-weighting transactions, instead of accepting any transaction on a first-come, first-served basis. And third, developers are proposing a fee model to give users the option to pay for more urgent transactions. And should the fee model roll out, we would likely see it in Solana's v1.11 release. So Solana may have a bit of an uphill battle ahead, but there's still lots of promise for the future. And we have a great deep dive video with Maddie that compares Solana to the likes of smart contract giant Avalanche. And you can cue that video right up here with this link. That's it for your Altcoin Buzz news update. So how are you feeling about the Federal Reserve meeting tomorrow? And do you think these changes can help Solana's cause? Let me know in the comments. And if you enjoyed this video and want more insights for your crypto investing, please smash those like, subscribe, and notification buttons to get all our latest content. And have a look at the other updates and deep dives on our channel. Here are some videos to get started with. And as always, this is not financial advice, but we wish you the best of luck in your crypto ventures. Thanks for watching, and see you next time.